President Trump pushing to make the U.S. a global energy superpower. Listen.
We want to be energy dominant in terms of the world. From my first day in office, we've taken swift action to lift the crushing restrictions on American energy.
This as oil prices actually trade in bear market territory right now in the aftermarket session. We do have it at $44.69 per barrel. I guess we saw the most recent high of $58, and that was way back in January. Joining me now is someone who knows and can answer the OPEC versus U.S. frackers. He's the CEO of Laredo Petroleum, Randy Foutch. First of all, it's so exciting, certainly, to feel like we don't have to depend on craziness in Venezuela or the Middle East for our energy.
Well, thank you for having me here. But yeah, that's the point that I think we're slowly getting across to a lot of people, in that the United States, because of the way we've been able to drill oil shales, we now have a say and a voice in what happens on the world energy market. We're contributing significantly to the world supply of oil.
President Obama had said that the U.S. will be energy independent by 2020. It appears we're nearly already there, correct? And President Trump says the U.S. is on the brink of becoming a net exporter of energy commodities. So they're both right, and that's a great thing to be correct on, isn't it?
I think it's very much to our benefit as a nation to not have to rely on other people for energy. Energy is a proxy for standard of living. The more energy, the higher the standard of living. So the fact that we now have substantive oil and natural gas supply is good for all of us.
I have to ask you, though, the price is so depressed. That's great for consumers when they're buying gasoline at cheaper prices. But for an explorer, certainly somebody like Laredo, what price is break even for the oil industry per barrel? Some say it's 50. Otherwise, if it goes below that, they can't make a profit. What's your break-even price?
We actually take a little different view on it. And what we're trying to do is look at the difference between what it cost us and the price. We, as a company, have very little control over what the world price of oil is. It is a supply and demand. We're using 95, 96, 97 million barrels a day in the world. The U.S. is contributing about 10 million of that. But what we do see is that as prices deteriorate, service costs generally go down. They may lag, and so our margins don't go down sometimes as much as the price of crude.
Okay, but for Laredo, what price do you guys like to see?
We're a little bit different in that we're hedged. We know what our price is going to be on the minimum side for most of 17, the rest of 17, with about 70% of our production. We're hedged in 18 with about 70% of our production. So we have a lot of downside protection. If prices run down below that, we expect service costs to adjust also. So we're one of those companies that has said we were going to protect our downside by hedging our product out a couple of years.
And that seems to be working for you. While the stock is down about, I guess, 2.8% year over year, it's not as bad as it looks. I love to remember the headline from, I think it was September of 2012, where it said, oil and crude drop to $114 a barrel. Will we ever see that level again? You know,
you learn never say never, but I think we have changed the supply-demand curve with what we found in the Permian and a couple of other bases, the Eagle Ford and the Pocket, such that we really have to have huge changes in demand before we'd see prices go up anywhere near that.
Got it.
We're pretty comfortable with prices much lower than that as long as we protect our margin.
Good to see you, and we wish you the best of luck. And in these changing times, Randy Foutch has been in the business more than 30 years, so this is the guy who knows. Laredo Petroleum Chairman and CEO, thank you so much.
Thank you.